Six Flags riding into some headwinds as the amusement park operator evolves its pricing and product architecture. However, this turnaround effort is casting some doubts, leading to William Blair downgrading the stock to market perform. Joining us now for more on this and the journey ahead for Six Flags is Ryan Sundby, who is the William Blair Equity Research Analyst. Ryan, great to have you here with us this morning. Okay, so when you think about the changes that need to be taking place, or perhaps should have taken place by now over at Six Flags in order to really elicit that park goership or the park attendance, and then additionally, just the number of people that are willing to spend up on their experience at the park, what do you believe Six Flags needs to do in 2023 to course correct?
Yeah, thanks for having me on the show. Really excited to be here. I think thematically we are still huge believers in experiential entertainment. It's something that we've seen take share over the last 2 decades, and I think will do so coming out of the pandemic here. I think there's technical reasons for that, right? We've seen changes in technology in terms of how we're sharing our experiences online, and I think that's really fueled the experiential spending and will in years to come. Moving to Six Flags. I think clearly the strategy there is to focus on enhancing the guest experience. And I think that's something that the new management team wants to do. They're doing that with less attendance and higher per cap spending within the park. And I do think that strategy has a lot of merits to it. It's just a tough year to kind of put that into practice, right? So just to kind of put that in perspective, right? We started the year with Omicron. You had the conflict in Ukraine. You had inflation spiking this summer, high gas prices, you had news around the midterms. And so there was a lot of noise for the consumer. And I think that's a hard time to kind of reorientate your brand during that period. So I think when you look, the execution here didn't really match the expectations this year. But I think you have to give management some credit here for recognizing that wasn't working. And they're trying to pivot to some new ideas here, right? So in October, we did see them change their pricing structure a little bit, and they had some success there. I think for us to get more constructive moving forward, we need to see that consistent growth in attendance and per caps, and not a trade-off between those two. And, I think if we start to see that, then I think we can get more constructive at that time.
Now, we should quickly know we've been following the Six Flags activist situation closely here. Salim Basal, the CEO of Six Flags, and head of comms, Stephen Pertell, were just refusing to reply to our request for comment. Now, Ryan, back to you here. Should Salim just be given the boot? Because a lot of the strategies, sure, he might be trying to fix them now, but it's him that I think just rode the discounting wave perhaps too long and now has Six Flags in this current situation.
No, I think Salim's come in with a different vision, right? And I think you got to give him some time to play that out. They did move aggressively, and I think there's some learnings from that, and I think they'll take their learnings and keep what worked and maybe revisit and enhance what didn't work. But I think there are merits to the overarching strategy there. In terms of the activists, I think that's more around how can they unlock financial value there, right? And so this is something they looked at back in 2015 and 2016 about exploring a REIT structure or looking to do a sell leaseback through the real estate. I think it's gotten a little tougher for them to do that, given some changes in the tax code. But I do think when you look at Six Flags, it's a tool that they can pull or a lever they can pull if they want to. So I think it gives them financial flexibility. It's maybe not something they need to do today, but it's something they can consider in the future.
I remember during past recessions, the hedge against the prices over at Six Flags or some other amusement parks, but primarily Six Flags, was just showing up with a Coke can and trying to get a discount on a ticket. How do amusement parks perform in an impending recession that economists have continued to forewarn about?
Yeah, that's actually one thing we really like about the regional theme park marketplace. They are able to capture trade up during good times and then trade down from destination resorts during bad times. So I do think, structurally, there's a lot to like there. There's also a huge supply constraints when it comes to theme parks, right? It takes a massive investment to build one. And because of that, you kind of have these many markets where one theme park kind of dominates that city or metro area. So I think there's a lot to like, right? I think as air travel has gotten more expensive, the local option is appealing. And so, I think that they do hold up well. When you look at attendance during the last 2008, 2009 recession, it only declined mid-single digits there. So there are some defensive natures to it. The part that kind of throws a wild card there is, Six Flags push to kind of premiumize the park here and how that will impact the consumer next year in a tougher macro.
Ryan, is there something wrong with the park internally? Does the food suck? Are the rides boring? Because I look across the pond, or I look down to Florida, in our case, we're in New York, and Disney's crushing it. People are going into debt to pay more to go visit Disney, but they're not willing to do that for Six Flags. What's the problem here?
Yeah, I think there are a couple of things that Six Flags can work on, right? I think one, and this does get into Salim's strategy around declining or suppressing attendance to improve the experience, is there is an opportunity cost to having a guest in the park. And if they're not going to spend, it can still prevent spending from other guests. So I think optimizing that guest mix is important. I also think they could lean into IP in a bigger way, right? You see Disney do that heavily with Avatar or Avengers or Star Wars. Six Flags does have a relationship with Warner, and they do use IP around the Warner superheroes. But it is something I think you've seen other parks lean into even more. And so that could be an opportunity in the future for Six Flags, is to maybe try to enhance their positioning with maybe a better connected IP product.
All right, we'll leave it there. Ryan Sundby, William Blair, equity research analyst. Good to see you. We'll talk to you soon.
Yeah, thanks for having us on. Thank you.